Greetings everybody, Sive Morten is here with the ForexPeaceArmy.com. Let's take a look again on the gold market. So in this video we, as usual, consider a couple of moments briefly the new report that we have prepared, what it is dedicated to, what important things we have considered, and second, as usual, we try to prepare the plan for a coming week, what to do. So speaking about report, we have provided the tons of forecasts this time. We have taken a look, and the forecasts are on almost every big house: JP Morgan, HSBC, Deutsche Bank, Citibank, Goldman Sachs, BMOs. So it's lots of extraction from the reports of these big banks concerning gold. Why we actually did this? So we're not too much interested with the long-term forecast because it is clear that they stand somewhere between 4,000 and the 6,000. We mostly were watching for driving factors because we need to understand the numbers of the big processes that stands with the redistribution of the global capital in the moment where the global finances are standing in the segregation stage. So and we see that the big numbers show that market is not at some extreme points. If you take a look at the view on the speculative positions on the ETF funds, the Fed dovish policy is yet to be started, so it is announced, but it's now still the riddle question in what way it will go. So what shape it will take. From that standpoint of view, everything seems more or less pretty nice. But that led us to keep our long-term view intact. That's the process of the big rally in the gold might be just in the initial stage. If we take a look at really big picture, not pay attention to the tactical overbought or something like this. And actually, it's just confirming that the same things that we discussed in the previous few months, where we take a look at the statistics on the United States economy, some really problems that it has, and actually where it could lead the market. But from the tactical point of view, unfortunately, this big view not help too much to decide what to do in the current situation and how long this really big rally could last. And here we're using three big, by our view, big and important issues. First is a big technical targets. I already talked about this last week. Second is the degree of the gold rush, the sentiment of the people. So people who have actually no relation to the gold market suddenly start standing in the lines, long lines, to buy the bullion or coin or something. And it's absolutely madness currently. So I suppose that when the whole household starts running into the gold, this is the point where the tactical reversal should happen. So all these weak players have to be knocked out and give chance to the big players to get positions on the better prices. And the third is the statistics. So gold market right now stands in more than the 3 deviations, standard deviations above the long-term all-time moving average, and that also statistical measure that put the odds in favor of the pullback. So market needs to take the breath. Actually, if you take a look at really big picture that we usually keep an eye on a yearly chart, you will see that this recent jump for $150 above our target looks very small in a picture if you're just applying the same scale. Mostly we could say that market stands around the target, and we can't say yet that market is ignoring it. Finally, which is last but not least, we see the really big risks. I would call it as a tail risk, some kind of the wild card, but the chances that the overall system of the trading of the physical metal might be crushed because too big paper positions on the bearish side has been taken by the banks. It already shows the problems that we discussed recently, where the difference between the futures price and the spot price, big the rates for loaning of the metal reached unprecedented 30% annual 30% level. So it's just some madness, guys. And this is really big risk. Maybe not everybody pay attention to it, but we think that it might be used as a precedent for the global banking crisis. So if somehow banks can't actually execute their obligations on their paper contracts to deliver the physical metal, but this will happen only if demand for the delivery will keep rising, or it will be big spike for delivery in a moment. So you could read about this if you would like to in report. As usual, I will put the link down below the video. Speaking about our trading plan and a short-term picture. So in the current situation, all time frames starting from month down to the daily are not usable to us, because actually you do not see there anything. You see the thrust, some fib levels, and that market, well, showing some bounce out from the top. From that standpoint of view, the only ability for trading currently we have by focusing on intraday stops, intraday trading patterns, until at least these good trading setups will start appearing on the higher time frames, for example daily. But this will happen only when the market will reach an area around 41 or even 40 even right here. So here's might be something, but until this will happen, we have no options but just dealing with the intraday trading steps. So starting from the 4-hour time frame chart here, where we've got the stop that we would like to get. If you remember, we said this will be a really great stop for a bread body trade for a possible upside pullback. Whether it will be just for 618 resistance somewhere back to the 4320, or it will be attempt to just breach the top once again, we will see. But in general, consider this thrust, momentum stands on our side, market has reached predefined support, and a bounce here should happen. So we're in the initial point for position taking that we discussed. Actually, this trade repeats the same that we traded here, and even earlier. The difference only with the scale. So here you can see the thrust was 2 times shorter. Here is 2 times greater, but overall stop remains the same. And now, if you take a look at the hourly chart, I will show you on the same picture here, just to change the time frame. Our double repo pattern worked perfect. So we haven't called you to trade it, although it was not forbidden, but we just said that since we have the bullish context, you could trade it if you would like to, but we will use this pattern just as a trigger for retracement that we would like to get. And you can see here it works perfect. Thrust up, close below the 3x3, close above, close below once again. At this candle, double repo has been confirmed and collapse has followed. So perfect performance. Now we have actually 2 different trading stops in place, but first one is once again more theoretical, although once again it is not forbidden to do this. You could see that the overall downside action based on the double repo is also the thrusting action, and is suitable for the bread and butter trade on the hourly chart, but on the bearish side. So we have thrust, retracement, and at some point we could get downside drop here back to the 618 support of the whole possible upward action. The scale of this trade is very small, so if you would like to do this, you probably usually should trade on a very small time frame, somewhere on the 15-minute chart probably. The only exception might be if we will get not the double repo, not the bread and butter, but double repo instead. In this case, it will be bullish. So in this case, actually, the double repo pattern could become the one that will trigger our trade. So if you will see the double repo on the hourly chart, it means that our trade on the 4-hour time frame chart, right, is starting. So in fact, speaking it simple, just do not confuse it too much with all these terms, double repo, bread and butter, and so on. So the double repo buy on the hourly chart will become the bullish pattern that will trigger our bullish trade, momentum trade on the 4-hour time frame chart. Compared to all other classical patterns that we're usually watching, hand shorts, bread and butters, butterflies, and so on. In this case, it might be that also double repo pattern. So now if you take a look at the classical patterns, I will use 15-minute chart to show you a bit better what's going on here around the support. So here you could see that downside XOP target has been perfectly completed right at the 42 support that we have discussed. And in fact, here we're a bit late for position taking, because you can see right on Friday deep evening, it was the reversed hand and shoulders pattern already in place. So normally we would consider position taking around 42.18 with this retracement. That was also the right arm. Market shows now upside action. But since this trade is just starting, and if later the bearish brand body still will be formed here, we could get another chance to enter, as it could take some large ABCD shape with the action to the target. Otherwise speaking, just keep an eye on the Monday what will happen, if we will get some pullback here, or if we will get double repo pattern on the hourly chart. That might be another chance to step in. In the case of the double repo, market even could retest the previous low, so it might be a relatively deep retracement here before upper direction will start. In fact, it might be some kind of the double bottom on a 15-minute chart. So currently on the current shape is different scenarios are possible, and it's impossible to say what particular will be formed. But we know the area, we know what to watch for. So let's see what will happen on Monday, and keep watching what will happen with this trading stuff, because it's well, really has good potential. It's a bigger scale, so it will be a bit pity to miss it. That's probably all for now. I'll return back to the subject on Tuesday.